This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, traders. I'm Daryl Richburg, and this is your Forex route for March 16th, 2007. It's been a quiet session to end the trading week, with the dollar ending marginally lower against the euro, pound, and yen, while capturing minor gains against the Canadian dollar. Today's news releases consist of CPI, industrial production, and the University of Michigan consumer confidence numbers. Of those releases, the consumer price index held the most importance. The headline figure printed higher than expected, coming in at 0.4% for the month, bringing the annual figure to a rise of 2.4%. The core reading was in line with expectations, calling for an increase of 0.2%, pushing that annualized figure to 2.7%. In recent weeks, we've seen an increase in speculation surrounding a possible rate cut in the latter half of 2007. Such speculators cite slowing economic growth and a weaker housing market as reasons to cut rates sooner than later. While the Fed desires to keep economic growth on track, its first task is to fend off inflation. As long as we see inflation data such as today's, accompanied by minimal GDP growth, a rate cut in the near future is doubtful. In the bigger picture, the focus of traders around the globe has shifted primarily to risk aversion. We are now seeing the theme take this toll on stock markets in most major economies as investors look for safer investments. The fear really began last month when Chinese stocks took a huge dive, leading to sizable declines in European and U.S. stocks the following morning. We have now seen a subprime mortgage scare in the U.S. add fuel to this fire, which is still burning strong. Defaults on subprime mortgages could reach alarming levels this year, financially crippling millions of U.S. consumers. This also threatens the housing market in general, and former Fed Chairman Alan Greenspan said this week that it's not a small problem. Of course, any threat to consumer spending is a serious concern. Even Ben Bernanke said recently that consumers are still the mainstay of the U.S. economy. Some of the biggest beneficiaries of this flight to safety and quality have been U.S. Treasuries and low-yielding currencies. Overextended carry trades funded by the yen and franc in particular are being unwound and could be vulnerable to further pullbacks. Although in the final sessions of this week we have even seen higher-yielding currencies rally big against the dollar, which tells us that traders are becoming more bearish on the currency in general. We believe that the dollar could very well remain weak in the short to mid-term until other economies begin to show signs of slowing as well. In the event there is a major global slowdown, the greenback may stand a better chance given its historically low levels. Until next time, this has been Daryl Richburg with your Forex route.